Hello everyone! In this video, we will break down what real passive income versus scams really means. Welcome to our channel, the Enchanted Luxury Studio, where we talk about wealth and luxury. Warren Buffett once said, "If you don't find a way to make money while you sleep, you will work until you die." Having this idea in mind, people resort to finding the best passive income available. Well, who wouldn't want an endless stream of cash flowing into their bank account without lifting a finger, right? That is exactly what passive income promises, and it appeals so much to a bunch of people who aspire to be rich. Several network marketing feeds on their desires by selling various passive income concepts that neophytes are easily hooked into. The problem with that is not all this passive income offers are real or efficient in the long run. Keep in mind that money takes a lot of work, and while passive income truly exists, there is more to it than making money as you sleep. Allow us to explain what passive income is so you won't fall victim to this kind of trap. First, let's define the term. To put it simply, passive income is a type of unearned income that is acquired automatically with minimal labor to earn or maintain. It is often combined with another source of income, such as a side hustle or a different income stream that doesn't require an employer or contractor. The point of passive income is to allow someone to make more money by doing less or nothing. As a result of bad actors largely promoting the term, the definition is vague and loose. State regulators are also having trouble defining passive income and determining how it should be taxed, and the online financial education is nothing better. They tend to feed you with a lot of false promises, using the word passive income as their ultimate clickbait. They will offer you a perfect mixture of seemingly well-attainable course of action. No experience is required. Work from the comfort of your home, and anyone can do it. It is important to understand how passive income works in order to not be sold on fake dreams. The flawed idea of passive income. In his book 1997, Rich Dad, Poor Dad, Robert Kiyosaki emphasized how the poor and the middle class people work for money, while the rich let the money work for them. Many reality-based scenarios would suggest that such a statement is actually true. However, this sentence alone fails to showcase the entire picture and can lead people into believing that wealth is that easy to attain, which is not the case most of the time. This idea of passive income assumes two things. 1. You can make money anywhere and everywhere. 2. Opportunities are endless and you can always multiply your cash with a very minimal effort. The make money work for you scheme is not the worst advice, but it is somehow excluding poor people as most of them don't have the privilege to do so. People become more and more inclined to these passive income schemes, and for them, it is the best formula that can solve their money problem. Earning more by doing less is indeed an idea and possibility that is way too perfect to disregard. This is where the rule of thumb must be taken into account. If it is too good to be true, then it probably is. The real passive income. Take note, only two types of assets are most likely to bear the resemblance of the standard definition of passive income. The first one is stock investing, while real estate is the second. These two are the only things that are proven to make a great sum of cash with the least involvement on your part. The context of investing is not that hard to understand. Basically, it requires you to purchase a portion of a certain company at its current value, hoping that the company will grow in the future along with your share. After a while, you can sell the share at a profit and that's it. The same process applies when it comes to real estate. Buying something now with the hope that it will increase in value over time is the bottom line. The only difference is that instead of a share, it is a property you must buy. You sell the property in time and make much profit out of it. Stock investing and real estate are two ways to generate passive income that doesn't demand your first-hand participation, except of course when you're doing the act of buying them. There are not many other forms of passive income other than these two. Now, another conflict with the term passive income is that people often find it synonymous with revenue streams, and they, in their mind, seem simple to generate. These two terms bear differences. Passive income versus revenue streams. Revenue streams are usually not passive. In fact, most cases would suggest that it is the opposite. Building a good revenue stream is a lot harder than it seems, as it demands an ample amount of effort. It is not something you can just have out of nowhere. Let's look at renting as an example. To buy a property and let people rent is believed to be the most dependable way to build a revenue stream. The reason this works so well is that it has both sides of the coin. You continue to earn rent while your property appreciates over the course of time. However, its compelling efficiency doesn't make it less hard. A capital is a basic requirement in order for you to purchase a property. Then, you need to acquire knowledge about the housing market in your locale. Actively investing in the maintenance and improvement of your property to make it ready and worthy of rentals is also a must. Finding out the best return on your investment for renting follows that. Then, you need to set up a team who will manage the property on your behalf. There are a lot more things on the list than you imagine. All these points are just mere summarization of it. This highlights the difference of revenue stream from passive income. Building a stream of income requires a lot of involvement on your part, especially during the beginning phase. This very notion contradicts the meaning of passive. Although your involvement can be minimized in the future, it would still take time. Go ahead and get your favorite beverage and popcorn, subscribe to our channel, and turn on notifications. Types of revenue streams and how to build them. There are 3 types of revenue streams. 1 is volume-based, 2 is premium shared, and 3 is full ownership. Now let's break down each of these 3 for better understanding. The volume-based revenue is perceived as the most basic form of a revenue stream. Included in this category is anything you make for a third party to sell on your behalf. A perfect example of this is a stock website where people create contents for others to use through a third party. You only get a portion of the payment when someone downloads your content. This model mainly relies on the quantity of the product you produce. Let's say you're a videographer working for a website who offers stock footage. For you to have a better chance to sell your footage, you must put up tons of high-quality clips on these websites. The more content you have, the more chances you get for someone to buy something you made, earning you a commission. However, as the barrier for entry is unrestricted, the competition is high. Millions of videographers across the globe are competing against you. Like you, they also upload hundreds of footages probably on the same website. While volume-based revenue is a decent way to earn cash, you have to consider the minimal chances you have. Another thing you must take into account is that most stock websites take away 20 to 60% royalty fee. And with footage going for as little as $20, you will not be earning as much as you should. The premium shared revenue is the second type of revenue to be discussed. In contrast with volume-based revenue, your focus in this category should be on the quality rather than on quantity. An example of this is a MasterClass, where industry experts use their knowledge and skills to teach students the intricacies of their line of interest. Take note of the word experts. Beginners have no place here. You are either really good at what you're doing or you're out. People with an actionable skill set and has a heart for teaching are perfect for this. The next best step for someone who is really good at something is to teach others how to do it. The third and last is the full ownership revenue. This happens when you build a product that you own 100% and sell it to a large audience by taking advantage of technology. To put it another way, it's about building a business. The most significant aspect of a business is that it is certain to generate income for you, and building a business is anything but passive. To give you a realistic perspective, if you bring in at least $10,000 per month from 7 revenue streams, you're considered to be doing well. And that ends our video for today. Do you now understand what makes an income passive? How about it's different from revenue streams? Let us know your thoughts in the comments. Thank you for spending some time with us today. If you like this video, go ahead and give it a thumbs up. If you haven't done it already, subscribe to our channel for more awesome content like this. Thanks for watching!